Crypto. All the crypto news in one place.
Alright guys, let's move on. Bitcoin Fear Grid Index. Today it is at 23. Extreme fear, more or less similar where we were back yesterday at 24. But yes, indeed, the market is quite fearful. If you take a look at the annual Bitcoin Fear Grid Index, yes, we are technically at the bottom. There is not much more down room Bitcoin can go because fear, the blood on the streets, the concerns about Bitcoin technically at the whole new level. So,
but just the day after Christmas, and that's shaped up to be tomorrow, the 26th of December, we have the largest options expiry in Bitcoin and cryptocurrency history. There is literally $28 billion is the projection of the total amount of options that are going to expire. And when we check the max pain price on Deribit, that is the platform for options trading with the most amount of volume, we will notice that it's actually $96,000 because we're so close to it now. CoinGlass doesn't want to show us the data, but it's $96,000. The max pain point is going to be $96,000, where most of market participants lose money.
But if we're taking a quick look at the Bitcoin liquidation heat map, we can see that we still have a lot of liquidity building just above the price of Bitcoin, still sitting at close to or just under 91,000, really in between around 90.6K to 91.1K. In that entire area right there, we have a lot of liquidity, but especially around 90.8K, 90.9K. So once again, just underneath 91,000.
The biggest problem we have right now is Nvidia is worth more than Australia and Canada combined. And when you look at something like that, you're like, that's kind of like the Emperor's Palace in the 1980s being worth more than California. You know, it really feels bubbly. And if that bubble pops, it's about 1% of the entire US GDP. So that can create a catastrophic recession. And unfortunately, there's a correlation between tech stocks and crypto.
We know that next year is going to be a full year of increasing liquidity from quantitative easing, from no tax on tips, which should bring $1 trillion into the economy alone. Then you have Kevin Hassett, or worse, that's going to be coming in and replacing the Fed chair. We know that they're pro-monetary policy, they're pro-Trump monetary policy. Trump made an official statement on Truth Social last night that we covered live, and he stated that, you know, if you don't follow essentially my monetary policy agenda, you're not going to get to become the next Fed chair. What does that mean? It means that rates will go down by full percentage points. So quantitative easing, cheaper money to borrow, cheaper money to lend, then you have no tax on tips, and you just have so many different policies as well lining up that is pro-institutional capital flow for crypto, specifically like the Clarity Act.
Once the Fed stops to reduce their balance sheet, usually, according to the data here, they usually start to expand the economy pretty soon thereafter. You can see it very clearly here. They expanded the balance sheet, they reduced the balance sheet, and then they started to increase it again. Here, they reduced the balance sheet, they started to increase it again once they stopped reducing it. So what we can assume is that once the balance sheet stops being reduced by the Fed here, then they are going to start to stimulate the economy and print money pretty soon thereafter, because this is what you can see it very clearly here on the chart. That is what they've done every single time in the past. And we can start, if we zoom in here to where we are at right now, we zoom in very, very closely, you can see as the balance sheet has been going down, down, down non-stop here, we can now start to see it finally starting to tilt upwards here.
Gold is exploding. Bitcoin is about to go parabolic. So indeed, according to this chart, gold works more or less as a leading indicator. For example, in 2016, gold went up first, and then guess what happened next? Gold mean reverted, gold corrected, while Bitcoin skyrocketed in 2017. And then in 2020, gold went up first, Bitcoin has been going sideways more or less, and then in 2021, gold corrected while Bitcoin skyrocketed. In 2025, it seems like we are seeing a very similar scenario. Bitcoin has been going down more or less, while gold has been skyrocketing entire year. So it seems like 2026 there should be a mean reversion. Gold should probably correct while Bitcoin should skyrocket.
The 100 weekly moving average is exactly this yellow line right here, which currently we are still bouncing from here. And what you can see in every single bear market, basically here in the 2022 bear market, the moment we confirmed the break below the 100 weekly moving average was the moment where basically the brutal bear market got started. And you saw this also happening in 2018. The moment we broke below this level, the brutal bear market came here. You saw it also in 2014 from off this level. We dropped about 80% here once again here. So this is truly the signal where the more brutal crashes tend to be happening. And currently Bitcoin, like you can see, is sitting on life support on this level. So it's going to be very interesting to watch to see what is going to be playing out whenever we break below this level.
But what I want to point out to you is that generally speaking, when Bitcoin does this, where we have a quarter that is just completely one way, in this sense, we have been going down, vice versa, when you have a quarter that goes completely to the upside, more times than not, the next session, so the next time frame in that same caliber, so in this case, looking at next quarter, basically, it does tend to be a reversal, right? Or at least the opposite, okay? There's going to be a ton of things that generate above us. We have all kinds of new information. I've been covering this for a little bit here. And overall, I think that we have a likeliness for Bitcoin to come back up into, at least this middle region here, into the $100,000 area. Now, the trigger for that is going to be the tricky piece. We have the low currently sitting about 80,500 down here from November. And I really have to imagine that we end up coming back down below that, effectively doing the old sweep the low and go.
But if we confirm, let's just say a daily candle close below around 2.8k, in that situation, that will set up a price target at just under 2.4k, more specifically around 2380 to 2390. And so, for example, if we're measuring that move from the point of the breakdown to that price target, that's possibly around a 15 to 16% move down, and that's with no leverage.
Now, Ethereum has been pretty much doing the same thing. And if we were to see Bitcoin kind of come down to those lows around that 80,000 again, I would imagine ETH probably makes its way down towards about 24 to 2,500. We want to see some strength hold there, again reclaiming and or just holding. You don't have to necessarily take it, but the ideal trigger for this move would be to do something like that. Would be 2,600. So lose 2,600, flip around down in that region for a bit, start living above that again is the ideal situation for a move back up to the upside on ETH. Also, the gold pocket of that again comes back in at like 4,000.
Ultimately, what I just want to be pointing out here is that, yes, if I am looking at most of the charts, we are seeing a clear signal that Bitcoin is indeed, technically speaking, entering somewhat of a bear market. First of all, we are right now seeing the breakdown below the 50 weekly moving average. And there's just been something that every single time whenever this happened, it has been so far in the history of Bitcoin confirmed at least a longer period of a downtrend, aka a bear market.
If we just would have done that from just this small amount of time frame below here, and it's just one option. Like, my options are, I do dollar cost averaging. I have been buying. I'm short-term bearish, but I've been buying Bitcoin every day. I think this is the time when people should be buying, but I can't say that because I can't give financial advice.
So the altcoin market, you can see, is at the new low, essentially, for this cycle. We have not been this low since April of 2024, essentially, and we had another drop here in March of 2025. So this shows me, and you can see also a potential double top pattern being printed here. So uptrend, you have the first top here, second top, and then if we break this neckline, then the altcoin market, from a technical standpoint, could continue towards the downside.
This is the bottom of the bottom. And I hate to break it to you right now, but even though we broke through that 50, we're not even close to the 50 week or to the 200 week at 56K. As time goes on, of course, that moving average moves up, and I can see us bottoming out at 60, 65K, maybe 69K, which would be kind of funny because that's the latest price for the last presidential election. So if we get it there, this would be, as Ivan was talking about, is like the bottom of the bottom.
So, did you enjoy the VAP? Let me know in the comments.